Another strong weekly close for the year, hitting new highs. Can this rally continue? Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you, so get yourself a drink, sit back, and relax because we have a lot to talk about. Now, what we saw for this weekly close was one of the larger candles for the week on the S&P 500. Quite frankly, this is one of the larger weeks that we've seen also in the QQQs. Now, this was all of a result of the news that came out with the fact that we had strong positive readings on the CPI that came out on Tuesday this week, and along with the Fed interest rates pretty much unchanged. And the markets took this quite positively. Again, there was really no way to know if the market would have taken this reading positive or negative. The fact is that whenever we see a setup like this, the key here is to really understand that risk management is the most important thing. Many traders who took advantages of this move made good money trading it to the upside. However, with any upside move comes with risk. The key here is to know how to manage that risk. As we know, with up markets like these, that only means that the downside is greater, considering how far we fell in 2022. So what we are looking at here is the year to date for the S&P, which is up 15.4% year to date. The QQQs, which is up incredibly well, pulling in a 39.11% year to date. The IWM, small cap ETF, up 7.23% year to date. And the lagger of the bunch, which would be the Dow Jones Industrial Average, which is up 3.54%. Now, what we want to really recognize here is the collapse on the VIX. Year to date, it is down 40%. So we are now at 13.54, which is incredible. So with a rally like this, we have to come back to the grips of having rallies like this to continue. Because as we know, markets really love to revert back to the mean. What I have here is the 15 moving exponential moving average. And as we know, the market likes to revert back to the mean. So what we can expect to see here in the next couple of weeks or months is a possible pullback. And if it were to pull back, we'd want to see it move into this moving average. And if we are expecting it to continue, we want to see it to bounce, test this resistance point here, and then obviously continue. And that is what we can expect in the next few weeks to next few months, if the sentiment is there. The key here is to really monitor how new developments are to come into fruition, because as we know, this week's Fed interest rate hike is not the end. If we look at the economic calendar, we also have another CPI reading on July 12th, and most importantly, the Fed interest rate decision, which would be taking place on Wednesday, July 26, 2023. So these are different events that we have to monitor to see the full reaction of the Fed pause. As we know, we've seen Fed interest rate hikes within the past few months, and finally we got a pause, which the market seems to love. However, we want to see things develop. As we know, we are hitting critical levels within the market. We can see that the Qs are right at this level here at the 370 level, which it has rejected this week. And we can see different reaction points here. The key is to monitor how the market reacts to these levels. Will it pull back significantly and hold? If we can see that hold, we can definitely see a retest of this level to break through, retest again to see if it could form a support and then continue. Now, we can see the same reaction here on the SPY. It is hitting these levels here, which is the 350-ish level. We want to make sure that it can test that level and eventually test, pull back, resumption, find a support again at this 450 level, and then obviously continue to all-time high. Now, can we see that? Most definitely yes. Right now, we see strong trends in many indicators like the MACD. However, what is notable to see is that we are pulling into an overbought level. Being overbought does not mean that we will automatically sell off, but we can start to see levels where there are many interest in buyers and sellers where they're going to really take advantage and really hone in to see what can be developed here. Now, rallies like these must be supported by sentiment. As traders, we want to make sure that we are picking endpoints to either short the highs or buy the lows. But ultimately, when we see trend like this, the best thing to do is to follow the trend and obviously manage your risk. So that is what I have for you today. Make sure you like this video, hit the subscribe button. That way you can get our future videos whenever they're released.